Welcome to my advanced scalping course. This video is specifically tailored for prop firm trading. It's not your typical candlestick pattern tutorial. This is a blueprint from trader to trader, with strategies designed to help you hit consistent payouts. I'm sharing insights and techniques that you probably haven't seen on YouTube. The goal here is simple: focus on the process, not the profits. When you plan your trades and trade your plan with discipline, profits become a natural side product. This is the secret to consistent trading, especially in prop firms. Get the process right, and the rest takes care of itself. Our goal here is simple: consistent payouts. We're doing this for the money, not for chasing those 1 to 5 risk to reward trades or trying to make it look pretty. Tilting is not allowed. I've designed this prop firm trading style to prevent tilting, and honestly, it's hard to tilt with this approach. Accept your losses before you even enter a trade. Now it's time to start treating trading like a business. We're not using trade copiers in the first two styles. Yes, you can make big money with a trade copier, but how many of you are actually doing that? So, forget about it for now. We'll get back to it later in the video. You can't trade prop firm accounts the same way you trade a personal live account. Prop firms have rules: daily drawdowns, max loss limits, and consistency rules. So, how do we trade prop firms? Let's start with this. These numbers are completely achievable. You can see how staying within the rules still allows for great profits over the year. Let's carve out the blueprint and system to keep those consistent payouts flowing. First, we need accounts we can trade and actually get payouts from. So, let's start by focusing on evaluation accounts. We don't want to waste time on evaluation accounts. We want accounts we can pass in seconds or a few minutes. I'll make a separate video where I walk through different styles for getting funded accounts in seconds or minutes. In fact, I already have one video where I pass these accounts in seconds and make 7 funded accounts in 10 minutes. But I'll dive deeper into those styles in another video. For the system, let's start with the basics. Let's do a little calculation. Let's say the evaluation costs $35 and the activation fee is $130. So the total is $165. What if we doubled our evaluation? We're accepting that we will lose the second account. We're okay with it because even with that loss, we're still getting a funded account for $200. I will keep this short. One way to get a funded account is to go one account short while going one account long at the same time. We're not trying to pass every evaluation account. We're just turning the numbers in our favor to actually get those funded accounts. So, we accept that our pass rate is between 30 to 50%. That's the reality. All right, we're building a master account army for ourselves. I'll use 15 accounts as an example here, but you can calculate the number of accounts that works for you if this isn't something you want to do. So, these 15 accounts have cost us $3,000. Let's say we can get a $2,000 payout from each account. That means we only need to get a payout from 1.5 accounts to break even. So, what if we blew a little over half of our accounts but still get payouts from 7 accounts, which is 47%? We're still making $11,000 in profit. But what if we're only getting payouts from 5 accounts, which is 33%? That's $7,000 in profit. I think we'd be happy with that number as well. All right, let's see how to trade these accounts. This is the foundation method, and it's really good to start with if you haven't built enough confidence yet, or if you're going through tilt sessions. Use one bullet with a 100-tick profit target and a 50-tick stop loss. Trail your profits. Set your break-even at 2 ticks, your first target at 26 ticks, second at 42 ticks, and your final target at 100 ticks. Take one trade per account. This is really crucial. You have to follow this rule. If you're trying the same trade plan again, but from a better price, accept the loss with the first account and take the second entry with the next account. Maximum tries per setup. 3 attempts, then you need to wait and look for the next setup. Usually the first entry is a bit early, but your second entry is on point. If volatility is good, you could make $500 with the second entry. So, you lost $250 with one account, but you win $500 with another. You see, you don't care if you lose with one account, you still have 14 other accounts left. We need to thank Apex Trading for this setup. They had a rule that didn't allow DCA, so I had to figure out a way to trade the accounts. At the time, I didn't believe it would lead to building an entire system. Now, you can DCA with Apex, but just some background information on how this all came together. This applies to scalping overall. You need to understand one key principle that many scalpers follow. We don't chase big wins. Our trades last seconds, so we don't hold and hope. We're what most people would call more aggressive traders. So, our game is more about maintaining a high win percentage rather than waiting for those massive home runs. Then comes the best part. Let's start to take trades, at least in a hypothetical way. Let's look at trade profit. Yes, I'll make videos on setups and strategies later, but first, we need to understand what we're really trying to do here. Let's see the first round results. Alright, we've taken 15 trades now. Some of our accounts are in the red, but we had a good run, and most are in the green. Let's move on. We don't trade the green accounts anymore. There's already a good amount of profit there, and let's imagine that today's the kind of day where the best moves have already happened. So, we're going to give those red accounts a second run. This is where we focus on getting those accounts back into the green while we leave the profitable ones alone to protect what we've already earned. You can see we ended up with pretty good results, and our trading day is done. Now let's start to look at these with a more whole daily perspective. The thing we'll do next day, and every day after that, is change the order of the accounts we trade. So, the first account we traded on the first day, we'll trade fifth the next day, and so on. Now, we see that this yellow account is starting to get close to payout. It's still pretty early, but we'll pull this account out from the back, at least in our minds, and try to preserve it by only taking the best setups we can find for the day. Alright, we got lucky and locked in our first payout. Now, we start protecting this account to meet the minimum days required to request the payout. We'll do the same process for all accounts that are getting close to our payout zone. You can see that we have our worst performing accounts, and I've set those first in line to trade. These accounts are typically more close to opening, and things tend to be more volatile at the open, so it's easier to recover and lose accounts when things are moving fast. So, let's move on. Okay, now we've lost two of our master accounts, but it doesn't really matter. Why? Because it's part of the process, and we can't expect to get payouts from all of our accounts. We've accepted that we'll lose some, but we'll win some. You can see that you're about to hit your first payout from these accounts, which is $2,000, but you've lost accounts worth $400. So, you feel happy even if you lose accounts. Let's stop here for now. We're making new master accounts to replace the ones we lost, keeping our system running. We've split our day into different sections, trading evaluation accounts at certain times and trading our funded army at others. We'll get back to this later in the video, but the key is using profits to build a bigger army. And now, after completing a 10-day trading cycle, this is how you'll keep things running smoothly. With this system in place, you'll be able to consistently scale and stay on track for those payouts without getting caught up in the chaos. Now that you've got the foundation of this trading process down, let's look at the next variation. This one pushes a little harder towards those payouts, but be prepared. You'll most likely lose a few more accounts in the process. So, we now have a couple of different entry models to work with. The first of the new ones is aimed at moving your average entry price down. Here's how it works. You take your first entry, but your stop hasn't hit yet, so you add a second mini contract. The goal here isn't to aim for a bigger profit, but to move your average entry to a better position. Your second entry stop should be in the same place as your first entry stop, and the second entry's target is just 26 ticks, enough to bring in a small profit, but primarily to adjust the average entry price. The benefits of this model. If you're wrong, you have a smaller loss overall compared to just taking the first entry because your second entry hit its profit target. If you're overall right, you can make a little extra profit. The downside. If you're wrong, your loss will be a little bigger, but not twice as big since the stop stays the same for both entries. This second entry model uses 2 bullets also. The idea is to push toward payout. Remember, if both of your profit targets hit, you might violate your consistency rule. So, Check the specific rules of your prop firm to make sure this aligns with their requirements. Both of these methods can also be used by adding to the winner. Here's how. First model. If your trade is already working in your favor and you're in profit, you can take a small trade inside of your bigger position to increase your profits. The idea here is to capture a bit more of the move while you're already in a good position. Second model. When you're already correct, you can add to the position to aim for bigger profits. This method works well if you feel confident that the move is going to continue in your favor. By adding to a winning position, you increase your exposure to the profitable move. But remember the trailing drawdown. Lock in your profit when you have those. Everything works the same in this method. You just jumpstart some of your accounts, and when you get closer to the payout zone, you start to trade those accounts more safely. Okay, let's see how we can use the trade copier. Trade copiers can bring a lot of issues. They don't work super well, and that's one of the reasons why I prefer the two methods I've already mentioned. I think you need more than 30 accounts if you want to copy trade, or if you are a trader that wants to take, let's say, 5 trades in a day. This is how you can trade with those. I will split them into 10 groups. Why? Risk management and the same principles as in the last methods. Choose your leader account. Use that has bigger profits than follower accounts have. Take a trade. Next trade with same leader account, rotate your follower accounts. Let's think of it this way. You have 10 leader accounts, and then there are followers. Use the same leaders as long as they're performing well, and rotate the followers each time. At the end of your trading day, there should be just 1 leader and 2 followers without trades. The next day, start with a different leader account. I wouldn't go over 5 accounts in a group with this method. The more you add, the more likely you are to encounter problems. When you get accounts close to payout, I prefer to trade those separately. The purpose of the trade copier has already been served, and you want to avoid big losses near payouts. You don't want to risk it. I've been trading live every day using this method since the beginning of the year, starting with a small army and building a bigger one. So you can join the live trading session and see when I apply these methods live. And if you have any questions, I'll try to answer as best as I can. Let's look at the work hours. When we're making master accounts and trading with funded accounts, we want to trade our evaluation accounts before the market opens or 30 minutes after. I prefer to trade during news events, especially red folder news, or at the open when we see volatility. I prefer to trade those accounts that are not performing well closer to the open. This way, we have time to get an overall picture of what might happen that day and save our funded accounts for when the picture is clearer. The starting point is to wait 30 minutes before trading funded accounts, and if you want to trade those less performing accounts, because you don't have to trade evals, wait 15 to 20 minutes for those. If you think the market conditions are too risky for funded accounts, use the evaluation accounts. Save your funded accounts for the best setups, and remember, you don't have to trade every account every day. You don't even have to trade any funded accounts in a day. If you're not feeling the market, trade evaluation accounts or just don't trade at all. The next day, you'll almost always find better setups. The only thing you might miss are big losses. But if it takes 15 days to get a payout, so be it. Don't push accounts too close to payout, but stick to the system. We can't get any more out of the markets than what they're giving us. Thank you for watching. I'll be making more videos in this series on setups, how to pass evaluations, and much more. This was the blueprint for trading system, so hit that subscription button and I'll see you in the next one.